Hey, what's up, guys? This is Chef again, coming out with your second video. This is your part two to the recent video that I just made based off trading strategies to your own style. And what I really just want to cover is just my trading style. And I know a lot of people have the same question when it comes to like how do I enter, when to take profit, and what's the stop loss, and what contracts to look at, what patterns, and what is a zone. So I get all these questions, multiple times that through through DMs, everybody just kind of wonders like how I trade or what my strategy is. And just like I showed in the recent video, I showed a couple tickers that had a few patterns, and again, everything comes down to what you decide to trade, depending on strategy, time frame. I mean, it's all on you, on how you feel comfortable executing a trade, because some people are 100% comfortable trading off the 1 minute time frame. Okay, others, are strictly swing traders that all they do is they wait for direction in the market, and they get into these trades based off the 4 hour and hour time frames and the daily time frames. So they're looking at the bigger picture. They don't care what happens on the 1 minute time frame. So like I said, it all comes down to who you are, how much you can handle, what your account size is, and what your goal is as a trader, because everybody has a goal, and not everybody has the same goal. Some people just want to grow their accounts, by 0.25 a contract, or maybe $50 a day, while others are making, thousands, others are making hundreds. So it varies. Everyone is so unique. Every person, every mind, on a psychological level, everyone is so different and unique in their own ways. Some people can handle 20 indicators on one chart. Some people cannot. I, on a personal level, cannot handle more than one indicator, because for me, the way I learn is I learn how to trade with the MACD, the VWAP, and the EMAs. And honestly, for me, my head just couldn't take it, and that is why, like, I despise indicators so much, because that strategy ruined my process of thinking. And the process of thinking, I kept looking at the indicator versus trying to look at the price action. Price action is where it's at for me. For me, I'm someone who is very simple, yet the chef life that I lived, I was somebody who was I can multitask like 100 things at once and still come out with the perfect dish right on time. If anything, I'll have it even sooner than the time that it's actually needed to actually cook something. So again, it it kind of it's different for me, because all I do is I like simplicity when it comes to these charts, and I cannot handle all these indicators on my chart because they drive me crazy. Versus the kitchen, I can handle over 100 things at once and still everything come out so perfect without burning myself, without cutting myself. Yeah, you'll get your little mistakes here and then, but again, the overall outcome, it comes out perfect in the kitchen for me. And it's the same that I try to tell a lot of traders that the way you live your lifestyle is going to depend on who you are as a trader. Because if you're emotional outside of this trading, uh, you're gonna come inside and trade, get into a trade, and maybe be red, and then you're gonna get angry, get all emotional, and then what's gonna happen is you're gonna stop out, and then you're gonna do the process on a repeated basis, and you're gonna stay consistent, making the same mistakes, all because you're emotional outside of this trading world. So again, everything falls down to who you are as a trader, and that is something you gotta find that makes sense to you, because it's 100% you. Okay, it's not 100% me. It's not 100% the guy next to you. Who cares if he's making thousands and you're making 0.25 a contract? I just made $7 on a $200 account. Like, I don't care if you made 25 and I made 7. Like, I could care less. Okay, because my goal is to grow my account. My goal is to play those small breakouts with a small account and grow the account. Okay, that's my goal. Again, what is your goal as a trader? You know, what is something that you feel comfortable looking at on a daily basis? Because when you chart, you're the only one looking at your chart. Okay, so it has to make sense for you. Okay, but I hope that kind of just drills inside you guys, because if this does not click in your head and you do not have a strategy, please do not go around trying to try every single strategy out there, because the more you do that, the more you're going to bounce around, the more you're going to fail at trading, and then you're going to wonder why you're failing so much, because you're trying so many things and you're clouding your head with all this nonsense that you shouldn't even be worrying about. And find and stick to one strategy. I don't care what it is. Use the EMA strategy, use the MACD strategy, use the Heikin-Ashi candles, you know, use the fibs, do whatever you got to do. If all you're trading is wedges, trade wedges. If all you're doing is trading ascending triangles, descending triangles, bull flags, I mean, pre-market levels, whatever it is you're doing, choose one strategy. Okay, so I hope that kind of just drills in your guys' head, because it's very important to find a strategy. Once that light bulb clicks in your head and you found something that works, prove it, show it, consistent basis. Do not stop. Post it. Post it in the Discord chats. Post it on your Instagram. Post it on your tweet. Do whatever you got to do, but show that it's working for you consistently. And at least 85% of the time you are right. Okay, because the other, the other 15, they're going to be losers, but they're going to be small losers. You want your winners to be a lot bigger than your losers. Okay, so remember that. Find your strategy. Find what works best for you. Okay. Okay, the recent video, this is one of the tickers that I showed right here. There was this pattern forming right here. Some people had a wedge drawn on here. Some people had a trend. Whatever it is, I don't care what you have drawn. Okay, it's all a matter of how you look at the chart and how you're going to focus on how to be profitable with this specific trade. As you can see, my alert was at 268. Okay, it never popped off. So for me, none of my alerts popped off to get calls, because I don't trade puts. So I could care less if you guys made puts, made money on puts, and I didn't make anything on calls. It doesn't matter, because the setup is right here for both plays. We're option traders. Okay, you can play both. So set your alerts on both. And you can see I don't have any alerts down here because they all popped off, because I knew this was already coming down. So again, I did not play the put side. I don't care for it. Okay, I'm waiting for the call side, and that's all I want to play. So that is my that is my style of trading. I wanted to trade this specific pattern on the call side, and never happened. It never triggered, so I didn't care. Okay, perfect though. Look, here you can see. Now, if you guys are wondering why I have two lines, okay, I trade zones. So a zone is an area where there are going to be buyers and sellers. Okay, and in order to find that, you got to be able to find support and resistance. And I always use a 4-hour time frame. Okay, I use a 4-hour time frame. I use a weekly time frame, but for this one, I didn't even use anything else besides this 4-hour time frame and this pattern that formed. And I was waiting for the break of this 268 right here just to go long. Never triggered. But again, the alerts for the downside did trigger, and like I said, I didn't play the puts. Okay, so I had two different alerts, these 261 and then the 259.70, whatever, if you want to get specific. So 259, sorry, so you could 260 to like 261 would be like your little zone. And it's just a small zone. Okay, this is not something major. It's just basically the area that once we start breaking below that specific area, it's going to drive down to the next one. Okay, and that's exactly what it did. Here you go. Is right in the next area. So this is the only way to find those zones. You want to grab this candle body here, and then the candle body right there. See, so I'm grabbing the lows. Okay, there's nothing down here. This is just the wick. This is the pre-market, so I'm not using the pre-market. Okay, same thing that I did here. I used the candle body. Same thing right here. I use the candle bodies. Candle bodies are kind of like lined up, and it matches right here. So everything's aligned perfectly. And again, you could have made some good money right here. And unfortunately, I don't play the puts, so again, it doesn't matter to me because that is not my trading style. Okay, so that's simple. Break below, you're going down to the next one, and that's exactly what happened. Okay, so that's Baba. Just wanted to run that one real quick. And here's another one actually that I actually posted this one in the chats. And same thing here. Here you got your demand, here you got your supply. Okay, it's what I do. It's why I trade zones. It's I find areas. Okay, so this whole area is a buy area. This whole area is a sell area. And like I said, most traders look for a specific price point that they want to get in. So like using this candle body, if we were to go over 53.52, that's a lot of people's entry points, because if it goes to 53.69, it's already too late. Okay, so that's the difference between my style and a lot of other people's watch list, because they're gonna say, "Oh, well, it's too late. The entry was, 53.52, and then it's already at 53.69 or 0.70, so you're already too late." So that's what happens, and a lot of traders get stopped out there because they missed their entry. But for me, so you can see here, all right, I grabbed the wicks. Right here. So this is your stop loss. When it comes to a demand, when it comes to something like this, you want to grab the candle bodies. Okay, here's the candle bodies. Here's some candle bodies here. Here's some price action. Here's some price action with the wicks. So I'm grabbing the top 52.60, and then I'm grabbing the bottom of this, which is 52.17. Okay, if you want to get technical, by all means, I would just say 52. Okay, so below 52, that's when you know that the demand zone is no longer valid. It's actually breaking through, and the supply zone actually took over. So now what's happening is this here, the way you want to look at it now, it's going to be a supply zone now, because we are under it now, and this is no longer a demand zone. When it becomes a demand zone, what you really want to happen is you want to see something like this, right? Even pre-market, like you want to see it like gap up, and then you want to come back like in here, and then maybe form like a pattern in here that's going to cause something like this. Okay, so let's just say something like this does happen. What's happening is here is whenever there's a break of pattern, you always want to see that retest. I don't care what time frame it is, 1 minute, 5 minute, 3 minute, 15 minute, 20, 30, hourly, it doesn't matter, because it's going to retest. Okay, this already broke, right? Broke down here, and now what's going to happen is you want to see the retest, right, the next day. Let me take all this off. So my alert now is going to be at 52 again. So I reset my alert, break above, and then this 52, 60 or 0.50. Okay, like I said, just keep the whole numbers. You don't got to be perfect, but once we come and retest, you can definitely enter for calls. Your stop loss will still be 52, and this is why I always say that my style of trading, my levels never change unless it's intraday and I'm calling out some type of scalp trade. Then the levels will change, because you're either forming like a little pennant somewhere, a bull flag, something's going on in between, some type of crazy volume came in the market, some news came out, whatever it may be. So only then will the levels change. But when you come to trading these zones, the levels will never change. This 52 is going to be the same over here. This is your long trigger, this is your short trigger to bring it down, but this is your trigger to go long, to break out of the range as well. So I have all these alerts here ready for it to go long. And like I said, I did not play the put side on this because I just don't. Okay, now the market was a bit green. We had gapped up, and then we trended down the rest of the day after we hit the resistance at 36.90 on /ES, which caused a lot of stocks to keep trending down. And a lot of stocks did not hold except for AMD today. So, again, you want to wait for the retest, and once we come into the retest, you still got to wait for the next retest, right? So let's just say we close in there. Okay, it doesn't mean that, we reclaimed it. Okay, when we reclaim it, it's because we did a retest here and we ended up pushing back up, the next day. So you still always want the retest. Okay, so we drop down. Here's your retest. If we close in here, cool. But remember, you still want this retest, and then you want to push up. You want to push up. You want a pattern formation somewhere in here, and then you want the next break. Okay, that's how you should be looking at a stock. That's how I look at a stock when I'm looking at the 4-hour time frame. When I'm looking at the price action, I'm looking at the 15-minute time frame to see if there's candle bodies just closing inside without huge wicks. Because if they have huge wicks, it's sign of rejection to either side. Just kind of like here, you just kind of see the pre-market pumped up, but then got smacked down here, got smacked down here. So there's a lot of bears in this specific stock on Uber, and most likely because their indicators are saying it's overbought, so they're trading that. Okay, so like I said, it's it's how I trade a zone. It's what I look for. It's my entry, 52.38, I don't care, that's an entry. 52.49 is an entry. 52.60, that's an entry. Okay, take it long in here and then trail it. Make sure you know the ATR of every stock that you're in, because your zone will matter. It's all about how it got there and how much more ATR does it have to go. Okay, let's just say this stock moves $2 in one day, and we come to 51, and then we hit 52. Technically, we just moved half of its ATR, so we still got another dollar, so we got to 53, right? So because it's a $2 move from 51 to 53, will the risk to reward make sense if you take it long over 52 to 53? Potentially, yes, but again, you're coming against the retest, and you're coming against all these bears that were pushing this stock down. Okay, so the trend is still kind of down, and I'm going to leave this there just to see what happens on the retest here. Maybe we can see another like retest here the next 2 days, and then on Thursday, heading into Friday, we might just start trending down again, or we might just potentially break to the top. But again, that's why you have those alerts. But that's how I view, my type of trades. All right, so let's talk about Microsoft real quick. And again, this is the one that I talked about in the previous video as well. And I said 213 is the level that needs to be reclaimed. And as you can see here, I even marked it. Okay, 215.50. Look at right there. It's hitting perfectly. Everything about it hit perfect. And this is just like the range break. Okay, this broke down, came down here, came to retest on Friday, and it closed inside. Okay, almost inside. I think it was like at 212, a little right below it. Nonetheless, we ended up staying kind of range, so it was like a type pre-market in there. Okay, so we ended up coming in here, so we kind of like gapped up a little bit, came down. But again, when it was above that 213, that's your entry to go long. Okay, go long. If you want to wait for the pre-market, you're over 214, so you're having like a little safer entry. But even if you go long at 214, your stop loss is still 213. Okay, this is how I trade. And this is where a lot of traders cannot handle the type of emotions that come with zone trading, because the contracts that you grab are going to lose value when you pull back. And what's going to happen, let's just say the contract was $2 and it drops all the way down to 213 again. Okay, what's going to happen to the traders? The trader's going to stop out because the contract already moved like 0.75, maybe 0.50, around there. And that's what's going to stop out a lot of traders. For me, I would still give it room and wait for volume to break below 213 and for the trend to continue below 213. So that is the difference between my style of trading and my entry and my stop loss versus any other trader who's trading on smaller time frames and just trying to trade these weekly contracts. So part of that is, trading the weekly contracts. If you don't know what theta is, if you don't know what delta is, you need to go study that, because theta has everything to do with those pullbacks. Every time a stock pulls back, and even though the stock is trending up, your weekly contract will lose more value than the 2-week contract or the 3-week contract. Okay, my 3-week contract will not lose theta as much as your weekly contract. So that's what makes the difference. And that's where a lot of traders get emotional, and then they stop out on some of these trades when they could have just held on just a little longer and follow the trend on the larger time frame and understand what the stock is doing, and still be profitable at the end of the day. I've seen it so many times where traders say, oh, I stopped out. Well, why'd you stop out? Like, you have no reason to stop out. Oh, because I was on the 1 minute or the 5 minute. Well, that was your first problem. You did not look at the full trade. You did not zoom out to be able to look at what's really happening in the market or with that specific stock. So that's why you stopped out, because you let your emotions get in the way, and all that happened was a little pullback. So like here, 15-minute time frame, one solid 15 minutes, you're green. You're over 214, you're closing over 214, and now you're moved up to 215.71. You could have been trailing it on the 15-minute candle right here. So this 215, you're already up $1. Who cares about the 0.71 cents? Your 215 is your stop loss, so you would have been stopped out already. Now, if you would have been trading a 3-week contract, you wouldn't care about that minor pullback, because the trend here is still up. You would have started taking profits at 215.50, because now what happened is, from the 214, you're already up $1.50. You don't want to give back $1.50. It's like half the move of Microsoft already. It's this ATR movement already. And again, if you were to let this drop, your theta would have kicked in already at 214, and you would have been at a break even, maybe at a negative, negative contract already by that time, especially on the weekly contract. So for me, again, another thing that I trade is 2 weeks out. So we're on the 14th, the weekly contract's 18th. I'd be looking at the 24th. All right, so I don't care about the 18th. I would be looking at the 24th, because today is Monday. So Monday, Tuesday, Wednesday, I'll be trading the 24th. Once Thursday and Friday come, I'll be trading the 31st, the in the monies. Okay, the in the money, you can do the 215, because we're at 214.20. So you're only just one ahead. So it depends on the stock. Okay, now if this were to be Tesla, you'd probably do like 2 or 3 a little out the money. You want to be too crazy, because those premiums are insane. So like I said, it's all about what you're trading, what you're comfortable holding on an emotional basis, and how much you can handle these time frames go up and down. Because look at this. I'm just gonna go on this 5 minute. This right here, this 5 minute chart already, you would have got scared right here. You would have said, oh, that's a reversal candle. I mean, it's a little hammer. So you would have thought, I'm coming back down. Oh no, we're trending down. We're trending down. I'm gonna stop out right here. Okay. Oh well, let's look at the 15. Just zoom out a bit. Look at this. All it was a little pullback compared to this big move already. 213 all the way to 214.50. Like, you're still good, because for me, 213 was the entry. The stop loss right down below. Okay, stop loss would have never hit, because you'd give it like maybe a 50 cent stop loss, or 30-cent stop loss, whatever. It's up to you. And then again, I'm not holding a weekly contract. I'm holding a contract that's 2 weeks out, so I still have time to trail it. Okay, and then when I trail it, go on a 30-minute time frame. Look, you're still not stopping out. You're still not stopping out. The trend is still up. The trend is still your friend until you get up here. This is when you start to trail. You don't want it to go below 215.50, and that is when you take your profit. Because of this specific candle, you wouldn't care what happens next, because again, if you looked at the market, started trending down once we hit up here, and then the trend ended up being the downward pattern. But that was the market for today. So that's just kind of a little quick review on how I look at my entries, what's safer for me, what makes sense for me on an emotional basis, how much my brain can actually function with this, because I do talk in the chats. Sometimes I go on voice and talk to the guys. Sometimes I deal with mentorship. So even when I'm dealing with all these things, and I deal with things at home, outside of trading, uh, it has to be simple for me, and it's easy. It's uh, as as funny as that sounds, like that trading is easy. It's not that the trading part is easy. It's the fact that being able to execute and manage my risk is easy for me, because I understand my strategy. I understand where I'm going to get in when my alert hits. If I set up a plan right now for tomorrow and my alert hits, guess what? I'm getting in. Okay, I'm gonna get on my phone, look at the market real quick, see what's happening, see if there was any news that popped off, any unusual volume, and if all of it meets my criteria within like 1 minute of looking at my chart and 1 minute of opening up my phone, then I will take the trade, and my alert is already on the take profit, because I know that it's going to go from one zone to the next, from the bottom of the range to the top. If it breaks the bottom of the range, it's going to drop even further. If it breaks that top range, it's going to go even further. So I'll know how to trail my positions once I'm in it. And like I said, it makes it easy for me because I already know my strategy. I already picked it up. I already excelled in it. And this is exactly what I teach. Okay. Yeah, there's a little more in-depth type things, but nonetheless, this is exactly what I do. Okay, so the 213 level is going to be the same tomorrow, all week. Okay, this level up here, this 215.50, guess what? It's going to be the same level again the rest of the week. Those are my entry levels. This 217.50, same level. It's going to stay that way because all of it is based on the 4 hour, and it's based on the fact that we are range trading. Microsoft has been range trading for a good while. And when it breaks, I'm going to be in it. And if you're not in it, I'm sorry, but I will. Okay. Tons of alerts here on the bottom. Wanted to buy the dip down here at this like 205, 207. Still wanted to buy the dip. So Microsoft's a good company. I like Microsoft. This is one of the first stocks that I learned how to trade with, and the movement of it's very predictable. Okay. But yeah, that's kind of like what I got for you guys on based on my trading strategy. It's it's what I do. It's what I trade zones, and is there just areas of buyers and sellers. They're areas of accumulation. Where people exchange their shares. They buy and sell, and they fight for the value of a price point. The value of a price point is very, very important because it, it's all about support and resistance. And support and resistance, every trader talks about, but they don't talk about how to view the price points, because it's about the investor who's investing in this company, who's buying shares at this specific price point. It's about those who see value in a company. Okay, we as day traders, sometimes don't view it that way because we really don't care. All we want to do is grab those small trades, and look at Instagrams, and watch people be profitable trading, and but having them post like some cool houses and cool cars and take selfies and all this stuff. Like it's very appealing, to the human. And the thing about it is, it's not about that. Trading is about risk management. It's about finding who you are as a trader. It's about finding your strategy and what works best for you, because what works best for you may not work for me. I know some traders that are amazing when they use all these indicators, and believe me, I can't even see their dang candles, but it works for them. It makes sense for them, and it doesn't make sense for me, and I will despise those charts. Honestly, with everything that I have, I despise those charts so much because that's how I lost a lot of money trading in the beginning. But if it works for them, it doesn't matter what I think. It doesn't matter how I feel. What matters is that they're profitable, and that's it. And that's what I try to tell everybody, that you find your strategy, you you trade it to the best of your ability, win or lose, but your win rate has to be higher even 75%, even if it's 51%, your losers have to be smaller than and your winners have to be a lot bigger. Plain and simple, guys. So again, I trade zones. My levels stay the same. I do 2 weeks out on the contracts. They're safer. I get more time. The trend change is my stop loss. Okay, if I enter at 213 on Microsoft, my stop loss is 212.80. I do not want it to go any further. If for some reason I stop out and then again I reset my alert at 213 and it goes above 213, guess what? I will get back in, because that is the price point area where I want to get in, and that is where I will take it long. Okay, so be patient. Be patient. You know, wait for your setups. Wait for, you know, those type of plays that you like to trade. And let me give you a patient play today. Here, Apple just kept squeezing. Okay, had you been patient on this specific play, okay, my levels never change. So like I said, there's 122.50 and then there's 123.50 and there's 123.25. That was where I had my alerts for go long. Unfortunately, the long triggers never hit, but the short triggers did. And again, you formed a tight pennant right here. And if this is all you're trading, look at this. You could have grabbed the put play right here. It would have hit this, and for some reason, look at the zones. All the price action started happening here, got rejected in this area. This is why I say area, because it's not a specific price point. I could just say 122.45, but it's from 122.55 all the way down here. So this is a whole area of rejection, and it rejected the whole way. Okay, so you could have played puts right here had you been patient throughout the full market. And while the market was trending down, this happened, and I kept eyes on this. I kept alerts on this. I wanted to play the call side, but unfortunately, it never happened. So I never took the trade. But still, you as another trader could have taken this put play, and you would have been good. You would have took it like 122.68.70 when it started breaking. Here was your breakdown. Here's your retest, and then you come all the way down here, 122.30, 122.13. You're golden. Your contract just moved at least 0.80. So again, it's all about you guys. Find that strategy, please, and when you find it, let somebody know. Tell a friend and teach somebody that, you know, your strategy is working. You know, share the wealth. So that's all I got for you guys. Hold on, let me show you guys one more. I had this on my notes. Tesla, same thing. Bottom zone. Look at this. Came to retest. Here's your little your pre-market levels right here. The tight pre-market probably fakes some of you guys out, but again, the trend's still up. And again, the 625 is still my area to go long. The 622 still to go long. And unfortunately, we didn't hit all the way to the top, but we still had room to profit. So, like I said, zone to zone. Your zone tomorrow is probably going to hit 650. Don't mark my words. Well, I mean, technically, you can't take this trade anymore. But that's what I'll be looking for. And then I'll have my alerts at 654. And then I'll probably take it long there. So again, I don't care much for the pre-market. What I do see is zone here, and then here's your next zone. So again, find your style, guys. Be patient. You know, you will get there. It took me a while to find my strategy through some bumps and bruises, some very painful ones. And, you know, all I'm doing now is trying to recover some of those losses still, some of those accounts that I have that were blown. Some of you guys already know that I'm already growing this negative 4K account with $200. So I'm green for the day today. It's pretty awesome. So yeah, guys, hope you guys enjoy this video. This was your part 2 for the trading strategy. And again, I'll try to do another part 3 when it comes to the type of entries and exit points. But for now, I just kind of wanted to explain to you guys what my trading strategy is and how I view things and how I do things um, while I'm trading. So again, there'll be a little more details, a little more in-depth conversation when it comes to the entry point and exit point. And I'll try to do it while the market is open, so you guys can kind of see what I do. So uh, have a great week, guys. Finish the year strong. Keep learning, keep growing, and again, patience pays, guys. Okay, stay green.